Dear Warren, why haven't you accepted my friend request? Is it because you went to Instagram? Well, hello, this is Am I Rich, and my name's Keith, and today's cheap stock is Facebook. Facebook, for those of you who don't know, is a platform that 1 billion people are on, so you're one of the minority if you don't know what they do. But what you might not know if you haven't seen any other videos about Facebook is that they also own Instagram, which is kind of the new hip version of Facebook, I guess. And a few other apps and potential businesses that a lot of people use. So, one thing about this company is that its PE ratio is currently at 21.9, and its future or forward PE ratio is about 19.5 at the average range, and maybe 20 at the low range, I guess. This is kind of average for a well-established company, but the reason that this is a fairly low PE ratio for Facebook is because Facebook is considered a growth stock, and that's also its price to book value is about 5.3, which is also not exceedingly cheap, but because it's a growth stock again, this is why it's considered cheap for Facebook. Its biggest dividend is $0, which is very disappointing. And I think if you wanted this stock for dividends or for a cash flow, then that's where it really falls short. But I guess, and it's probably one reason among others that somebody like Warren Buffett wouldn't invest in it. It has no dividend, and maybe he doesn't understand Facebook, which probably doesn't need to anyways. And then the 5-year growth annual growth rate is about 41%, which is really high. I think if the market's growing somewhere between 8 and 14%, then 40% is really shooting it out of the park. So it's with that growth rate, I think these PEs are fairly cheap. And now, if you've listened to any other YouTubers or if you've listened to any other analysts, you've probably heard that Facebook has a lot of growth vectors. Things like it can improve its advertising. Big mainstream advertisers, especially television advertisers, might move over to Facebook because it's the platform that so many people are on, and that's where their real attention is. And so when the more and more the big companies figure that out, the more they're going to put their ad money towards Facebook. Also, in case of a recession or a downturn in the economy, placing ads in something like Facebook that are directed at people that they know a lot about are going to be, like targeted ads are going to be a lot more effective than broad ads on broadcast TV or somewhere like that. So you may have heard these, and these are totally acceptable bull theses for the stock or for the company as a growth engine. And even if people say that people are subscribing less to Facebook, most of those people who are leaving Facebook are going to Instagram, which is owned by Facebook. So again, it's really likely that this company will do well in the future. Now, a bull thesis that I have, there may be others out there with this, but the unique perspective I see it is kind of that it has an additional, maybe not growth vector, but a moat at least. So something about Facebook is that there's this weird dynamic of 3 age groups that I see, and it's like seniors and people who are in their like 25 to 40-year-old range, and then young kids under the age of roughly 10 or so. Now, not that people under 10 are necessarily signing up to Facebook, but the dynamic I see is that as soon as people have kids, the grandparents want to keep in touch with the kids, and the way they keep in touch with these kids is usually, or see how they grow, is through Facebook. And so right now, so many people are signed up to Facebook. Once they start having kids, the grandparents want to see the kids, and then there's such a big group of people already doing this that it seems like it's too hard to move to another platform to do this. So it may happen in the future. Like there's still that age group, the teens to mid-20s or even a little bit older, that could potentially switch over to a new platform aside from Instagram, the next hip thing or whatever. But there's always been that need for connection, and at least for the next 10 years, because you're going to have a whole generation growing up, it seems like it's so much effort. Like even if people move to another platform, they would still probably maintain their Facebook just so that the grandparents could see their kids grow up. So I kind of see this as a huge moat, and another reason why this company just really has no realistic downside, I guess, in my opinion. So it's been going down. It was cheap last, if you consider its growth, it may have been cheap last quarter, and the Facebook earnings are coming out, I think, tomorrow. So it also is likely, I think the lowest estimates still show it to be growing more than it did last year. So it's still probably even cheaper than it was. Now, most companies, especially companies like in the S&P top 10, they usually don't go down consecutively for 2 quarters, especially at these kind of prices. So I think that Facebook really is, like, for me, it would be a buy. I have some Facebook, and I'll probably consider adding more. But I should also mention, I guess, the downside of it is the worst case scenario is that everybody did leave Facebook, and some other app came along and just took away everything from Facebook, which seems really unlikely. Like I said, there's this dynamic that it's going to be hard for people to move away. So probably the next 10 years, I don't see that as a realistic option. The other thing is regulation. People are worried about regulation, but my thought is, again, any other company that's in this space is going to have to fight that same regulation. And that if they have to, use less information from the people to get their targeted ads, they still hold the huge market share, and they still have this kind of dynamic of people that just can't leave. And I don't know that there's, I guess you could also argue maybe a big company from China would compete with them, but that seems super unlikely because most Chinese companies are just for China, and if they let in competition from the rest of the world, they probably wouldn't do very well. Or they might do well, but a lot of their companies wouldn't. So so that's kind of the downside. I really see this in the long run a great buy, and probably within this quarter, or at least the next 6 months, I would imagine a continued increase in the share price. Unless there's a huge economic downturn, then it might kind of stay stable. But realistically, I think this stock's going up. So that's kind of my hypothesis. And I don't know, what do you guys think? If you guys think Facebook is totally going away, if you think grandparents don't like to see pictures of their grandkids, let me know in the comments below. Otherwise, thanks for watching, and yeah, we'll see you in the next video.